pointed out, we are seeing a contraction, a GDP contraction. So the question here is, do we have adequate fiscal space to go for an economic stimulus package? Of course, we have announced in a series for the first time ever after the independence. We have gone into many mini budgets in 2020. We have announced many targeted economic stimulus package programs. But do we have enough space for a mega stimulus in future as well? So this is one question that is bothering us. And on the one side, Government of India has not come up so far with a huge fiscal stimulus package in the sense like, designing cash transfers programs for the poor or any kind of major demand stimulating program for two reasons. One, of course, it was not an error on the side of caution. What was the philosophy of the Government of India was that revenue stability is the basis of expenditure design. So we cannot have a huge fiscal stimulus unless we have a revenue stability. But in this question, this debate is open, whether this philosophy is right or wrong, whether we should be indulging in more public debt and to go for, huge fiscal stimulus package rather than, targeted fiscal programs. This is one question. And if we look at the revenue stability, this era, this is an era of revenue uncertainties. Tax buoyancy is, of course, not the basis of fiscal consolidation. Rather, we have to do expenditure compression because this is a time of revenue uncertainty. So if we indulge in expenditure compression, especially in this time of extraordinary times when, we need to survive first and then we have to, talk about the fiscal consolidation. That's a thought process. So prior to Union Budget 2021, Nirmala Sitharaman has spoken to press that don't fear deficit. This is not the time for, controlling the deficit. So that was the narrative. And if you look at the numbers, we pegged only 3.5% in our BE 2020. But if you look at the revised estimates, we have gone up about 9.5%. Our fiscal deficit is now, 9.5%. And the public debt is also mounting like anything. So what is the narrative here? The deficit is good as a narrative. And, prior to the pandemic, Krishna pointed out, I wrote a book on fiscal consolidation, budget deficits, and macroeconomic activity. In that book, the narrative based on the empirical analysis was that the deficit is good, a timely deficit is good. Because if you look at the macroeconomic consequences of deficit to other variables, they may not be huge. But at the same time, if you look at the financing pattern of deficit, each mode of financing pattern of deficit has got its own macroeconomic consequences. So yesterday, in almost all the major economic dailies and also in the major dailies, it was, it was published, Professor Pinaki Chakraborty's point of view that we should not be going for a sewerage financing of deficit at this moment. I can appreciate his point, where it is coming from. When we talk about the financing pattern of deficit, of course, it is compelling. This is the time in which we talk about the fiscal space, because it is on the basis of fiscal space that we design our economic stimulus program and the expenditure design. So the narrative is that unless your real rate of growth of economy is not below the real interest rate, then you don't have to think about the sustainability of deficit or to go for a monetization of deficit. So that was the narrative he was focusing. But we know that this debate is open. The bombshell was from the Kotak Mahindra and the industrial groups when they, asked the government to go for a huge sewerage financing of deficit recently. And you can also see the debate happening from the Nobel laureate Abhijit Banerjee, that he's also asking the government to go for a sewerage financing of deficit. Of course, I do value this point from a finite sense, in the sense the finite seigniorage financing of deficit is crucial because given the expenditure commitments we have, we need to go for it. But I do appreciate the caution Pinaki pointed out in yesterday. If you look at any major dailies, Economic Times or Business Standard, you can read his points. But the point where it is coming from, two things. What he was highlighting is that we can grow out of it. That is what exactly I mentioned as, if R is greater than G, then we need to worry. If your G is less than your rate of interest, then things are under control. That's where the point came from. And the second is, of course, you can grow out of it. And the second is the debt is sustainable. And the threshold levels of the deficit, even if it is mounting, you have to look into these two parameters. So that's a point from which he was coming from. So here, the point I want to flag is, it's not only the level of fiscal deficit that is important, but how you finance the deficit, that is equally important. And in 2019, that is prior to the pandemic, or even prior to the economic recession, I attended American Economic Association conference in Atlanta, and the presidential address, by Oliver Blanchard that time. You can read that, article by Professor Oliver. His point was that you don't have to fear public debt. If your economy is in recession, then if you control your public debt, that can have growth consequences, adverse growth consequences. So in the moment of economic recession, you can go for the public debt, you don't have to worry about even the fiscal rules. That was the point he was highlighting. And two things Professor Blanchard highlighted. One was your public debt, you have to use for not profligacy, fiscal profligacy, which Pinaki pointed out in his article, in his first interview after he's taking charge as the director of NIPFP to PTI. He pointed out that you can go for fiscal deficit, mounting fiscal deficit and public debt, but not for fiscal profligacy. But if it is for enhancing the public investment, or if it is to reduce the output gap, then go for it. That is exactly what Professor Oliver Blanchard was pointing out. And if you have a fiscal rule, you keep it as a contingency rule, but don't go for it. So that was the narrative. And here, in the sense, of course, in the budget, union budget, the last union budget in February, Srimati Nirmala Sitharaman has given indication that we have given emphasis on fiscal, not fiscal profligacy, but for the capital infrastructure investment and for public health infrastructure investment. Of course, these are good narratives because this is primarily a health crisis. So this health crisis should not mount into a prolonged macroeconomic crisis. So we need to have our public infrastructure or the health budget needs to be high because it is only maneuvering around 1% of GDP so far. And we need to focus on the public health. That is a primary cut because epidemiology of the virus that determines our economic growth. Some echo. Any microphone is...
Yeah, okay, others kindly request mute.
Yeah, thank you. So that's it. It's primarily a health crisis. So to prevent that from mounting into macroeconomic crisis, we need to invest on, public health and vaccinate, that's everything. So now the question, as I pointed out, the fiscal space, that's an important question. And here, the path to fiscal consolidation is not through expenditure compression this moment, because it will have adverse consequences on, macroeconomic activity and, of course, the human development capital formation. And as Pinaki always pointed out, it is not intergenerational inequity if you go for adequate public debt at this moment. In the sense, you are not creating debt for future. It is intergenerational equity if the use of public debt is correct. So if the use of public debt is not for fiscal profligacy, but if it is for the right kind of investment in the public infrastructure on health, in capital infrastructure, if the use of public debt is correct, it is intergeneration equity. This is another point which we need to think about when we talk about the public debt narrative. So the debt deficit dynamics is the thing which we need to, focus on. But output gap, as Oliver Blanche pointed out, we can use the public debt output gap. Here, one point I would like to emphasize. What exactly is output gap? It's a very difficult variable. Output gap is a difference between your potential output and the actual output. So actual output, of course, your GDP, even after the methodological revisions, we got the GDP numbers and the calculation is based on GVA, your gross value added and the fisc. So GDP is GVA plus fisc and the fisc is indirect taxes minus subsidies. Okay, that's fine. You have your actual output on board. And unlike the narrow economies, here the focus is not on employment, but on your GDP. Fine. Then how you compute your potential output? The potential output is computed through the econometric methodology. We use various filters to arrive at this. And the filters we use, HP filter, Kalman filters. If the series, you take out the cyclicality and you call the trend as your potential. But, is this correct? Is this methodology correct? And I have written about this in Financial Express. You can take a look into it with my colleague Amandeep Kaur, and many students have looked into that. And this output gap, it's quite a difficult variable. And in times of uncertainty, this macroeconomic uncertainty, this is quite difficult to measure. And of course, we use output gap as a measurement of this macroeconomic uncertainty. Is it correct? If we focus just on the cyclicality, are we doing a right kind of methodology or a right kind of analytical framework to identify other issues related to economic growth? These are questions. So people use hysteresis analytical framework also to, look into this economic growth, especially in the time of macroeconomic uncertainty. Hysteresis in the sense that the dependence of your economy on history. So it's a long-term analysis of the short-term dynamics. So that's another methodology. And you can also take a look into the article by Geeta Gopinath, and Mark. And that article is Cycle is Trend. And in that article also, the concern is that in the emerging economy context, the cyclicality is not everything. It is not a business cycle that you date your cycles, what is upturn and downturn, and you arrive at certain macroeconomic policies, and you think that your growth trajectory will bounce back to the prior pandemic convergence levels. Of course, in prior pandemic levels also, our GDP was not great. But if we go to the prior good, return to the good, growth, that U-shaped which we dream of, that doesn't happen like that. If we focus just on cyclicality and the output gap as a narrative, because we have to look into the structural components and the structural impediments of the economy. That's exactly why, if you look at the economic stimulus packages and the programs closely of Government of India, there are two components to it. One is the economic firefighting package, which was designed by the Government of India, and second is both by the RBI and North Block. And the second component was structural policies. You use this crisis as an opportunity to float your long-term structural reforms. And that was also done. And these two components were given emphasis. So you need to look into both aspects rather than just focusing on, output gap. So that's it. Now coming to the monetary policy side, in 2016, we have gone for a new monetary framework. And this new monetary framework was signed between Government of India and RBI, that the single most significant or the sole concern of RBI is price stability. So is that doing well in the time of pandemic? Because you can see, if you look at the monetary policy announcements closely, we were not exactly speaking about the price stability, we have gone to the prior new monetary framework when we floated the economic stimulus packages from the RBI side. They were getting into the regulatory announcements, they have gone into the liquidity infusion announcements, along with the inflation targeting framework. You have seen that the repo rates were adjusted and lowered, and quite consistently. And of course, the reverse repo rate was also, there was a nudging in the sense that we were giving importance to the credit, the lending activities, in the sense, the reverse, not the reverse, the repo rate was reduced in such a manner that if a good monetary policy transmission mechanism that functions, then it will get into the other interest rates, in the structure of interest rates and the term structure of interest rates, in the sense the short term reference rate that gets into the long end as well. So these were all our concerns, and whatever it takes narrative was, the basis of the announcements by Dr. Shaktikant Das. And there was quite a bit of heavy lifting done by RBI. And you must be remembering the Operation Twist announcement by RBI, in the sense they were going for a simultaneous buying and selling of securities, of bonds, in the sense you sell your short term securities and you buy long term securities to maneuver the maturity structure of your debt market, the structure of maturity, in the sense that you have your refinancing strategies on board, and the refinancing risks are now long term, it's not a concern of short term. And there are many other liquidity infusion methodologies. So the announcements were done by RBI to trigger the economy. And normalization procedure or the rollback of these announcements are not at on, because we fear that has got adverse macroeconomic consequences in terms of economic growth. So the normalization procedure of rollback of these liquidity programs, we have not yet begun, but we are seeing some kind of negative effects in the structure of interest rates, in the sense the call money markets are below your repo rate, and at the long end your security markets, the long term government securities markets, that rate is going haywire. There are issues when you look into the term structure of interest rate, but we are not ready for a rollback and towards a normalization procedure of even the monetary policy announcement. So that's it. So we cannot roll back our economic stimulus programs announced by the government of India, and government of India not block the primarily the announcements were related to the economic growth recovery. But if you look closer, we it was not exactly on an economic growth paradigm the announcements were made. There were components related to food security, social infrastructure, social protection measures, and also the government acting as an employer of last resort. So these four components were given emphasis in the economic stimulus packages. So it was not exactly the economic concern here is why people are asking for more fiscal space here. The concern is, are these adequate for our economy to go back to the pre-pandemic or pre-recession levels of the growth we had? Professor Ramana pointed out it's a contraction. We have to accept that reality. So, what is missing? What is a missing strategy that the government of India has to come up with? We have announced many structural packages. What is that missing component? Is that the fiscal redominance? That is what is missing. If so, what is that strategy? So these are the open questions we are maneuvering at this moment. But of course, a seigniorage financing of deficit or a helicopter money by giving cash in the hands of people, whether that direct benefit transfer is what we need to focus right now. These are questions focusing on right now, because the other structural reforms
Madam, just check. I'm not able to hear. Is everybody able to hear?
Is quite relevant. Yeah, the principle of subsidiarity is quite relevant here, that we need to emphasize the subnational government's pandemic economics as well, because it's a cooperative federalism. And for the first time, we have started nudging experiments with the subnational governments. Whether it is a debt deficit or whether it is a GST compensation. Earlier the macroeconomic uncertainties, that was the concern of the central government, and the macroeconomic stabilization was a function of the highest tier of the government. But right now, these uncertainties are really open to both national government and subnational governments. So what is that we need to take at the subnational governments? There, the fiscal space is equally a concern. And of course, the Finance Commission transfers, the revenue deficit grants, all these things are there in the hands of subnational governments right now. But after 1 year or so, it goes off. The GST compensation, what you're giving to the lower tiers of government, that, a kind of a fiscal space you get through the intergovernmental fiscal transfer will go off. So then the revenue mobility is an important concern to, go for your expenditure design. And even third tier of government, the expenditure uh, assignments and the revenue handles. So these are equally a matter of concern. And what are the non-tax revenue you need to focus on, when you talk about the fiscal space? And what Government of India has done right now is giving emphasis to the disinvestment, giving emphasis to privatization. So whether that fiscal marksmanship, because we have seen the numbers, the budget estimates and the revised estimates relate to the disinvestment proceeds in the last budget. It was not good. Our aspirations and the realized what do you call the disinvestment proceeds, if you look at the fiscal marksmanship, was not perfect. So whether that's a case even in this year, so what are the hurdles? Whether we have done the right thing, because Government of India has focused on the monetization of assets and disinvestment of proceeds as to enhance the fiscal space. We need to see what are the kind of the problems, the challenges the moment we think about privatization as a function or a methodology for enhancing the fiscal space. So these are the questions, and of course the fiscal rules. Excessive deficit procedure is a concern. We have our roadmap ready, but we are not going for a 3% of fiscal deficit to GDP right now, because it will affect our growth rate. So in the excessive deficit procedure roadmap, 4.5% of GDP, that if not initial equilibrium, we need to go back to that at the 2020 in 2020. So that roadmap is ready, and now that from the position of strength, what Finance Minister Nirmala Sitharaman is focusing on is spend, and that's on the basis of deficit is good narrative. But at the same time, I would also like to caution you that this 9.5 fiscal deficit to GDP ratio, that is not exactly the new expenditure assignments we have done in the time of pandemic. Of course, it is a matter of budget transparency as well, because we were giving emphasis to budget transparency, because we don't have a concept of public sector borrowing requirement in our country. So the fiscal deficit numbers were not inclusive of the off-budget borrowings, outside whatever borrowing that happened through public sector enterprises and all. So that transparency, I appreciate that transparency, which is given emphasis in this budget. And that 9.5% is a narrative of budget transparency as well. It is not exactly the new expenditure priorities. So here, another point I would like to highlight is, of course, the fiscal marksmanship. Whatever you announce as economic stimulus packages is one thing, but whether that is translated into realized spending, that is yet another. So this fiscal marksmanship is equally crucial to have your impact on economic growth, and also to address the mounting humanitarian crisis, especially what has happened in terms of the migration crisis. And of course, the unemployment levels are going up. There are concerns related to the job, which is plummeting, which is declining like anything. So the question here is, the narrative here is, before the economists and also the academicians like you, whether we should be giving emphasis to participation income or whether we should be giving emphasis to basic income. Because universal basic income is giving money in the hands of the people. That can only be short term. Even you can read the studies of job guarantee you can see the works in Levy Economic Institutes. They are heterodox school of thought. Heterodox economics always believe that employment policy is a solution if you are in trouble, if you are in recession. That means a government acting as an employer of last resort. So their concern is even when you give cash transfers to the poor, they look for job. So it is not that cash transfers to the poor is everything. As the time of pandemic, we can think about it, but otherwise, participation income, strengthening employer of last resort when everything else fails, the government should act as an employer of last resort. So strengthening participation income, the avenues for people to participate in the economy and earn income, that has to be given emphasis. So here, these are the two important questions. One is, what is the narrative of government when you think about the pandemic economics, whether it is participation income or basic income? Two, even when you correct the narrative, you have to be very cautious about your fiscal marksmanship, because we have seen NIPFP, we have done a study, Pinaki led that study, that and at the subnational governments and the national governments, we have seen that there are many factors which contribute to the budget forecasting errors, the fiscal forecasting errors. There are bias in it by the policymaker, there are variations, and there are randomness. So you need to see that, of course, if it is randomness, then it is beyond the control of the policy maker, because there are random factors coming from, fueling short-term food prices, short-term fuel prices, and there are other random factors, the structural problems when your chain is broken, when you announce a great lockdown as your strategy to control your pandemic. But these are short run, because these supply side impediments are short run, because we hope that with the exit strategy and with the gradual unlocking process and the emphasis on the sectors in which we have to go for a major economic stimulus program of economic recovery. With all those programs, I think the growth will bounce back to the pre-pandemic levels. But at the same time, we have to be very careful about widening inequalities. So there we need to have more programs, because this growth recovery may not be U-turn. Otherwise, there can be a K-shaped recovery as well. So we need to take care of the widening inequalities as well. And inequalities in the sense, it is not only income inequalities if you look into the income quintiles. And of course, there are deals happening in various parts of the globe. In the time of pandemics, there is a political economy to it. And in many countries, we have seen that the political economy, the kind of regime, whether it is an authoritarian regime, whether it is democracy, if you look at the studies by the Sweden Institute of Democracy, you can see that how this pandemic economics is affecting democracy. There are many political economic questions. So these questions are also equally relevant when you talk about the pandemic economics. So we need to see that from a political economy angle as well. And these are the quick questions I thought that I will highlight. And, I will open the floor, because I understand that inflation is now mounting. It is beyond the comfort level of, the band, which was announced by RBI, because RBI's, inflation targeting regime, of course, inflation targeting, that prior rule is based on your inflation anchor and the inflationary expectations, and also your output gap. And output gap, we have already discussed. And of course, inflation expectations is an unobserved variable. But since 2011, RBI has floated the expectation survey. So how the RBI is going to maneuver the expectations, whether, the supply side, the factors which is leading to this huge inflation right now, whether RBI is able to tackle that, because there is a confusion that RBI's focus on inflation targeting, whether it is not strictly a monetary phenomenon, what is inflation in our country. So whether RBI is able to manage inflation by, pegging the policy rates, the repo rates, that is a question. But of course, from the supply side factors of inflation, there is an expectations channel, and that is expectation channel that is getting controlled by the RBI's inflation targeting framework. So this is also equally important to understand that RBI is able to handle the supply side factors through the expectations channel. So these are the questions. So I will open the floor, and thank you so much for having me. And now I listen to the voice of students, and I will take all the questions and respond to you together in the end. And over to you, students and faculty members, for your concerns and clarifications, and of course, questions you have. Thank you so much. Over to you, Professor Ramana.
Yeah, madam. Thank you very much for highlighting and giving very nutshell. So the idea is that we want more an interactive session so that I'm sure this is the very ongoing and very emerging issue, and many people have difference of opinion or kind of concerns. You can unmute yourself and ask the question, or you can post questions in the chat box. So first I'll give, if anybody would like to ask directly questions, please go ahead.
Sir,
Yeah, Pavan.
ma'am, thank you for your lecture. It was very enlightening. So I have a question regarding cash transfers. So how are we going to finance the cash transfers if that is the only way out to raise the demand that has come down consistently? So what are the how does the government generate adequate money to ensure that this program comes out? Because government has a lot of other expenditures to make on. So how do we finance cash transfers, whether through bonds or borrowing? How do we do that?
Thank you, Pavan. I'll answer. Yeah.
So, good morning, ma'am.
Yeah, Ishwak.
Yeah, sir.
Good
So
morning. Go ahead.
Okay, ma'am. Actually, I have a dozen of questions, but I'll confine myself to just two queries. One, this about this consolidation strategy. I believe as a student in public economics that it has been disproportionately the debate in our intellectual circle here in our country about the quantity of deficits. When sir we talk in terms of it's 3%, 4%, 5%, and why not we have an adequate debate about the quality? First thing. Second, whenever we talk of consolidation, why is it to be always taken in terms of this expenditure compression? Okay, we have two more ingredients to this consolidation strategy. One being the revenue side, and another being the GDP itself. Because this fiscal deficit is a problem to us as a ratio to GDP, not in absolute form. Why is it always that we believe in this expenditure compression, and our intellectual circle is always hanging around this, and when we actually know that India being an emerging economy and a fiscal policy has a huge scope that we cannot evade. And third, ma'am, following this expenditure compression, we know most of the time then government resort to slashing down these vital expenditures. For example, spending in health and education. I am doing one study about this COVID and health infrastructure we had so far inherited. Okay, we can find it is disastrously very low, and then addressing a problem through this expenditure compression. Do you think that it adds to this problem again, because it gives the government a type of legitimacy to cut into these very productive sectors of the economy? Maybe towards the end you will show the light. That's all.
Yeah, thank you. And madam, you want to answer now before we take further questions, or?
We can listen the voices of students first, Krishna.
Okay, madam, fine. Okay. So I think Professor Ramakrishna, the senior professor, I think was raising hand. So, sir, you have any questions, sir?
Yeah. Good morning, everybody. Thank you for providing the access to an excellent presentation by Professor Lekha Chakraborty. I was listening to one seminar, a week before from Princeton University, Marcus Academy, and there was a voting, on what kind of policy should be given preference. I agree, macro policies are very, very important. And monetary policy was given only 0.3 percentage of support, and fiscal policy they said only 4% people supported that, and most importantly, people were referring to the vaccination policy. India being the highest producer of vaccine, and then highest user also, but still is struggling with the oxygen crisis, and then distribution as well as production as the requirement. So in this connection, just discussing monetary and fiscal policy at a macro level, ignoring other policies like the vaccination, distribution, and production policy, I think would yield a minimal result. This is one thing. I agree with you that as long as the growth rate is more than rate of interest in real terms, public debt is not a problem. But still, as one of the students pointed out, how we spend public debt is very important. Hope Professor Rekha would comment on these points. Thank you.
Yeah, I think there are 3 questions also in the chat box by Sir Ramnamurthy sir, you have.
Yeah. Uh, Dr. Lekha, I think that the pandemic is an extraordinary crisis, and extraordinary crises require extraordinary measures. But it's not. We are not getting the impression that government is really thinking that this is an extraordinary crisis, and it could be. I mean, we need to have maybe. We cannot have a normal perception or a normal policy and to tackle this kind of a crisis. And I don't know why there is a perception that the things will become normal by itself. And I think this is the most very disturbing idea that things will go to normalcy by itself. I think this particular aspect is not really, we didn't get the sense that, even all economists should really rise up to convey the government that this is an extraordinary crisis and it requires an extraordinary measures. Something that perhaps we have not seen, and something the whole nation has to stand up. Maybe it could be a taxation. We have to raise the tax, and we have to raise money and resources, and the country has to come up. And there is no such thinking as of now. You can comment on this observation.
Thank you, sir. Irfan, have any query?
Yeah, sure. Hi, Lekha ma'am. Irfan here. Very glad to hear your lecture right now. So my question is regarding the inflation expectations. Actually, the channel which has to work as a monetary policy angle from the perspective of a monetary policy, even though there are like the mixture of fiscal and monetary policy to work out in this pandemic situation and otherwise also, but most of the times the fiscal policy has to work. But at this point, I'm really confused about this idea that the prices are going up and it is out of control. Like the oil prices are going up and the production cost is going up, and many things like that are on one side it is growing. On the other side, there is no hope for the businesses, most of the businesses, and also the employment have gone down in a very, very deeper way. So uh, there is a confusion that whether people like I'm doing the survey, I'm doing the study on the inflation expectation survey of the households. So people are neither expected to have a positive expectation as the prices are going up continuously from the start of the COVID-19, and they are not also expected to have a higher expectation because the businesses are down and there is no employment and people have no money to spend and etc. So actually, what do you think will be mm, the kind of expectation that a common man or common this people will be having? That's what.
Thank you, Irfan. I'm just seeing there is somebody, BP, raised hand. I don't know full name of that BP. Kindly unmute and ask question. Okay. The next, Gaurav Kumar.
Hello.
Yeah, Gaurav.
Ma'am, my question is regarding the informal sector. In the previous stimulus packages, informal sector workers have been largely overlooked, and the credit support provided by the government is not enough. And so, keeping in view the large number of workers that work in the informal sector, what should be the measures to, for those sectors? That is my question.
Thank you, Ankit. I think last will take Ankit.
Yeah, good morning. Very good morning, ma'am. Ma'am, my question is regarding there was a recent petition in the court to give compensation to those who passed away in the COVID. So they demanded a 4 lakh rupees compensation. Ma'am, my question is regarding what will be the probable impact of if suppose the government agrees on paying the compensation to the deceased, what will be the economic impact of this, not only on the uh, not only on the finances of the government, but on the inflation, because we are already facing a huge problem of inflation in the country. Thank you.
Yeah, Madam, I think now you kindly respond. You consent.
Thank you, students. Krishna, there are some questions in the chat box. Can you read it out for me? I'll note down that as well. Or they have spoken already? They have spoken.
Sorry, they have not spoken, madam. I'll just read out.
Okay.
There is a query from Subal Danta from CDS. The query is like, as per the public expenditure is concerned on the eve of this devastating pandemic, can we bring the kids only means of focusing on public expenditure only without focusing anything from for coming couple of years in our union budget? And if so, what are the types of public expenditure we need at this moment to overcome this situation? Another question from Rohit Jha. The first one being, or indirect taxes also way to finance public debt? The other question is, the states which demand higher FRBM or market-based borrowings are ways of public debt financing. But if debt increases, is not to threat the declining the revenues. Another question from Dakushi Sahu. The studies are showing the pandemic has made impact on the men and women differently, as women are more vulnerable to paid work participation. How this gender budgeting or gender sensitive macroeconomic policies are going to influence such adverse impact of the pandemic? So Anjan Tripaঠি's question is, as there is a huge digital divide in the country, so it is very difficult for students to participate in e-learning process. Education disparity among the rich and poor is increasing in this pandemic. What government is doing for reducing this digital divide? So these are the questions as of now in the chat box, ma'am.
Okay. Okay. So let me go ahead.
Yes, madam, please.
Okay. Thank you so much. So let me take the question by Pavan, because let me take the question by Pavan. He was the first to ask me the question. And your concern is real. Like, if you're focusing on a huge fiscal transfers, then how to do the financing? That is exactly what Government of India is like. I don't know whether it's an error on the side of caution, because revenue stability and the kind of targeted economic stimulus announcements happened, That is basically the concern about the fiscal space. So do we have the fiscal space? If you look at the pandemic packages of India with other countries, especially the developed countries, the quantity, the quantum of the pandemic package, if you look into the size of the pandemic package is not that great in the context of an emerging country like India. So here the question is fiscal space. And what are the innovative fiscal ways to improve the revenue requirements, or whether we have to go for a debt maneuvering. If it is a debt deficit maneuvering, then what exactly is that? How we have to redesign the fiscal rules, and what exactly we have to do to finance the fiscal deficit? These are questions. And the government of India has not reached it is still inconclusive, not reached a bold conclusion about, going for the sewerage financing of deficit or the fiscal policy, monetary policy linkages to solve this issue. At the same time, Government of India has not yet taken a decision regarding the COVID bonds. Like in the context of the European Union, in the European Central Bank, they have come up with the idea of emergency pandemic packages and an emphasis on the COVID bonds, because after the World War also, we have seen such kind of bonds, we call it as consoles. So that decision, we are yet to hear from Government of India whether they are ready to go for a COVID bonds. So these are the questions related to the financing, the fiscal space, whether we will be doing more of a deficit dynamics. We are going to think about the fiscal consolidation little later by giving emphasis on the right kind of spending at this moment and reprioritize the spending by curtailing the fiscal profligacy. So these are questions we have to wait and see. And cash transfers. Cash transfers, I have seen that, my hunches in the press meetings, what I have inferred from the, from the officials of Ministry of Finance, that, their my hunch is, there is a feeling that the cash transfers will trigger economic growth, or whether, Rekuram Rajan also pointed out this concern, whether it leads to the precautionary savings. If the cash transfers is leading to precautionary savings, then that is, of course, not the powerful channel in which we can trigger the economy. But of course, I'm aware of the livelihood crisis. The moment I emphasis on the employer of last resort policies, if there is no employment, then there is a question that how we are going to tackle the livelihood crisis which is mounting. And we cannot see cash transfers as a channel to overcome this the demand expectations channel, because it can also lead to savings, may not be spending. That's one thing. Second is why the employer of last resort allocations, that NREGA allocations, if you look into that has come down. There is a concern. So the question is whether we can give that money to the laborers, because we are unable to find jobs for them, so we are not paying them. So this is a loud thinking. I'm thinking it, whether that's the right kind of a narrative, that we are not able to provide them employment, so we are not able to pay. Whether that should be the narrative, or whether we should be giving that money to the laborers, even if that guaranteed job we are unable to give them. That NREGA, the allocations we have, that is unspent, unutilized, whether we should be doing that. These are the questions coming to my mind, that within the constraints of fiscal space, otherwise we have to go for a bold decision about the fiscal space, how we can improve, whether it is COVID bonds or whether it is sewerage financing of deficits. Okay, and now coming to the question of Ishfaq, I cannot pronounce your name. You can unmute yourself and correct me if I haven't.
You can call anything, ma'am. This is Ishfaq. You can call. Not a problem. You can call.
Ishfaq.
This is Ishfaq. Huh.
Ishfaq, your question on...
Right, ma'am.
Thank you. Your question on fiscal consolidation, of course, I'm concerned about it. Your point on, it is not only the levels of deficit, it is not only the levels that matter, the path to fiscal consolidation is equally important. That's a point that was flagged by you. I do, totally agree with this point. The quality of deficit is important because in the time of revenue uncertainty, if your taxes are not buoyant, if you go for revenue expenditure compression, then of course that affects the quality of deficit. And you rightly highlighted that we should focus on health and education. These are very important. That social infrastructure spending is so crucial in this moment. So if you don't do that, we may have a fiscal discipline, but that fiscal discipline is not growth enhancing. That quality of growth suffers if you go. I do agree with you that we cannot just go for an expenditure compression for the sake of fiscal discipline. Because if you look at prior to the pandemic also, over the years at the subnational governments, there was fiscal discipline, but if you look at it meticulously, the fiscal discipline was done through many expenditure related to the capital, gross capital formation. And now, if you look at the GDP numbers, the narrative has changed from capital formation led growth to consumption led growth. And even if you look closer, it's a profit led growth that's happening right now. So, growth, even if growth is happening, that is profit led when your salaries are going down, when the jobs are going down. So, of course, this fiscal redominance is quite crucial to prevent this from, further rolling up into a big crisis. You're right that we need to focus on the quality of deficit. Otherwise, if we over adjust to fiscal rules, then it is fiscal discipline. I can understand that. But at the same time, you're not getting the quality of deficits right. Here, the crucial point is what are the sources of revenue mobilization? Whether the tax effort can be given emphasis. What are the sources of revenue mobilization? These are the questions we need to look into. And in the time of revenue uncertainty, you may not get your revenue mobilization quite right. Then comes a question then how we can redesign the fiscal rules, whether the fiscal austerity measures that can be that can wait for a moment. Because now if you look into the question of investors confidence, then you won't get the things all right, because investors confidence won't matter, because this is a pandemic time and we have to survive first. And if you look into the private corporate investment, what determines that? What is the determinants of investors' confidence? You can see in the empirical studies that your public investment is a crucial determinant. So even if you have a fiscal deficit, the right kind of narrative, what we have highlighted in the last budget on the public investment. So in one of the papers of mine with Rishikesh Vinod, and my colleague from IMF, we have written a paper that it was published in the Handbook of Econometrics, that you can take a look. And the narrative is public investment is crucial in the context of emerging economies for your investors' confidence or for your public corporate investment that crowds in. So don't go for, the macroeconomic fundamentals needs to be strong. That's a narrative. That's why we are very concerned. But this time, the quality of deficit is important, and you have to work with the fiscal rules. And these are the questions right now Government of India is engaged with, and we have to wait and see what is a new or the revised fiscal rules that's on board. And that's now work in progress, and we have to wait for the new debt deficit dynamics and the fiscal rules, which is going to be worked out by Government of India. Now comes the question of Professor Ramkrishna on the the weightage given to the different components of policies, fiscal policy and macro policies, and the health, the vaccination related policies. Of course, I do agree that the health, this is primarily a health crisis, as I mentioned in my lecture as well. And we need to prevent that health crisis from mounting into a prolonged macroeconomic crisis. And I do agree that the fiscal policies need to be given emphasis on the health related, vaccine related policies. And that's a prime importance. And I do go by that. And when we talk about the fiscal and monetary policies and the vaccination policies, these are not strictly mutually exclusive, but within the fiscal policies, what are the components to be given emphasis? As you rightly pointed out, we have to give emphasis for the vaccination policies and health related policies, as it is a primarily a health crisis. So, otherwise it will mount into a prolonged dual crisis of, health and macroeconomic crisis. So I do agree that. And here, as you rightly pointed out, it is not alone the question of fiscal space for vaccination. It's also related to how in the corporative federalism we are going to work with the vaccination policies, the governing questions, and all related distribution questions. And that is, of course, the governance question. And if there is governance deficit, of course, it is equally important to look into those deficits as well as the fiscal deficit or the policies related to the macro level. I do agree to that point. And unless we tackle that, we are, God forbid, if you get into the third wave, we will be in trouble. So this is quite important to emphasis on, the vaccination policies, and that is the prime concern we have, and the preparedness of the national government and the subnational governments, the health sector, to deal with this crisis. And here the points raised by Ishfaq and Professor Ramakrishna, these are complement each other, because we need to focus on the social infrastructure policies and also the distribution policies. Now comes the question of Professor Ramana, and these are extraordinary times and extraordinary policy responses are relevant. So when you talk about extraordinary policies, which is totally absent in the context of India, I can understand that you may be thinking the policies which were announced in US by Treasury Secretary Janet Yellen, the huge fiscal stimulus programs. And, we are seeing that overheating in US economy. They have gone for huge fiscal stimulus programs. And the Fed Reserve, of course, they have the 2%, the nominal anchor, they have to now support the treasury, support the fiscal policy authorities in terms of containing the inflation from mounting further. So what is that adjustments done by J. Powell? And there are lots of questions how they are tackling with that overheating of economy, and what are the kind of transmission mechanisms to the other part of the world when they deal with the issue. But of course, there is a point. Fiscal stimulus, that huge fiscal stimulus announced by Janet Yellen to revive the economy to the pre-pandemic level, that's quite crucial. And studies have also, shown that the Brookings analysis that in US, the growth path, the convergence of the growth path to the pre-pandemic levels in their projections, that is going to be quite faster, because of course they have gone for a huge stimulus packages. But in the emerging country context, the Brookings analysis, that analysis showed that it will take more time. So whether the fiscal redominance is required, what are the policies that economic stimulus packages that need to be done, whether that's a huge fiscal transfers in terms of cash transfer, as Pawan pointed out. But the question is whether that relate to stimulating economy or the precautionary savings that we need to look into. And of course, Professor Ramana, you pointed about the taxation side policies, the huge economic stimulus that comes not only from the expenditure side, that also comes from the taxation side. But I was quite relieved when government was not coming up with COVID taxes. What exactly should be a taxation policy in times of COVID? We have not, increased the wealth tax, like, taxing the rich, and we emphasis on the redistribution policies. So whether we should be doing that. Second is corporation, the taxes we reduced. So whether we should be taking the decisions related to business taxation, what are its impact on economy in terms of business sentiments. So these are the questions which we need to look into. But of course, you're right that we focused on expenditure related economic stimulus packages, but we have not touched on the tax related COVID-19 policy packages. And we need to see whether the government will announce any COVID-related tax policies in the context of India, because indirect tax policies, we cannot do anything because it will be regressive, because we are already maneuvering with the differential tax rates. So there's a kind of a rationalization required in the indirect GST taxation. So the questions related to that, that's a political economy question, with the veto power of the GST Council lies with the center. And what GST Council is going to do with the rationalization of taxes, that we need to look into. But for the direct taxes, whether we will go for a COVID tax and tax the rich, that we need to wait and see whether government will come with that announcements. And Irfan, your question, and you will be able to answer this more than me, I know, because you are doing your thesis on inflationary expectations. I know that your survey is progressing, and you're quite right that whether we will be able to control these expectations through this narrow monetary policy rules framework in this inflation expectations, that's quite questionable, especially in the time of pandemic. And the prices are, of course, going up. You rightly pointed out that the oil prices are going up. So, your hunch is correct that there is there is an emphasis for fiscal dominance at this moment, because it's not a question of central bank independence, or central bank is going to be the first mover in controlling all these inflationary expectations. We lived with that narrative of fiscal dominance and unpleasant monetary arithmetic so far by giving the first mover advantage to fiscal policy. And that fiscal policy dominance is quite crucial in controlling, in maneuvering these expectations through right kind of policies, to tackle this livelihood crisis and this mounting, labor crisis. So more than this, I think Irfan can, educate me on how these expectations is, spiraling and going haywire, because you are working the field level knowledge you have, I don't have, because you are working in this area and you can educate us more on how we can tame these expectations. Now come to the question of Gaurav. Of course, if you ask me that what are the missing components in the fiscal stimulus package, as Ishfaq pointed out, education, the digital divide is mounting, and that was a concern raised by Anjan as well. Digital divide is mounting. We need to spend on that. The second is informal sector. And you rightly pointed out there are empirical studies which showed that the informal sector dynamics which we need to look into. Recently in NIPFP, we have done a major international conference in coordination with the International Institute of Public Finance, and University of Hyderabad students also participated in that conference. And in that conference, there was a paper on COVID-related policies, and the title of the paper is Lights Out. It was done by Robert Baer, Tarun Jain of IIM Ahmedabad, and Sonali of RBI. And in that paper, there was quite a bit of concern regarding this informal sector dynamics. And the studies by Geeta Gopinath and her co-authors, to study the demonetization impact on the informal sector. So this is like, it's not new that we are grappling with the questions related to informal sector, and hope there will be a huge emphasis on informal sector. And the studies happen because we don't have data. There is no data paucity to study this in detail, the informal sector. Even in the paper by Geeta Gopinath and the recent paper by Tarun Jain, to understand this impact on COVID or the impact of other policies on informal sector, we use the nightlights, luminosity or luminosity, because the nightlights, if you focus, that's not the right kind of approach to tackle the economic growth questions in the informal sector. We know the limitations, but there should be more empirical studies on the informal sector. And I do believe that the next focus, because we have not seen, as you rightly pointed out, Gaurav, we have not seen a major emphasis on informal sector in our economic pandemic packages. And I hope that will be there. And of course, the digital divide, that is also not given quite importance in the existing pandemic packages. So these are two missing components. I do agree. And I do feel that in the series of economic stimulus packages, these two sectors will be given importance. Now comes the question of Ankit. I don't have a clear answer to your question regarding the fiscal space. The moment we talk about the health related concerns. But one thing I can tell you, Ankit, the emphasis of Government of India on health infrastructure rather than announcing a health insurance package, that I do value in the sense health insurance could have taken our economic or the health system expensive, and studies have shown that the catastrophic nature of household spending, out of pocket spending on health is quite huge, and the government related insurance packages that was making people, this catastrophic expenditure going further catastrophic when they announced the insurance related packages. So the emphasis on health infrastructure was good, but at the same time, the question you asked, I don't have an answer for that, and I do leave it there. I don't have an answer for that. And now comes the question of Subhash Dutt from CDS related to what are the types of expenditure we need to overcome this crisis. Of course, economic recovery, if we just focus on economic recovery or economic growth, we are not going to overcome this crisis because it's a humanitarian crisis as well. So the components which were announced, they were insignificant in nature so far, like food security, social infrastructure policy, and of course social protection measures, that is insignificant, and the employer of last resort, that is also announced, but it should be given more importance. So these are the four expenditure priorities I would like to give emphasis. And also, as pointed out by Anjan, the question of digital divide, education, because we have not given importance, because education, there's a huge problem in terms of the enrollment ratio, the whatever enrollment and literacy we have attained in our country, including Kerala, which is a good profile on literacy rates. We are going beyond, or we are going back to pre-70s levels. The moment we talk about this digital divide, the access of children to education is quite crucial, and digital infrastructure is quite relevant. And financial inclusion, of course, the cost of credit and access to credit, they both are equally relevant. In the pandemic package announcements, in the liquidity infusion, we have given emphasis to access to the credit, and the cost of credit, that we equally look into. But the question is, even after opening accounts for the poor, that digital infrastructure we have done, whether, all what has happened in terms of Jandan, that was not given adequate emphasis in the pandemic packages, we would be giving, it would be given more emphasis, because financial inclusion and the money in the hands of the people, and all those, transparency of government, dealing with the cash transfers, all these things can happen only if you have the digital infrastructure or the financial inclusion perfect. So that is a area in which needs to be given further emphasis. So that's my concern, Subhash or Subal. Okay, now the last two questions, and then I will wind up. The question related to the whether we should go for a taxation or whether we should go for high debt deficit dynamics. That's an intelligent question. And, I think taxation will be little problematic if it's an indirect taxation, because we are in the time of, extreme uncertainties, and this is a livelihood crisis. So taxing people may not be a good idea. I'm talking about the indirect taxation. So debt deficit dynamics, that is a way out. But how we are going to do this debt deficit dynamics? And we have seen the concern if you're going for the sewerage financing of deficits, because over the years we have controlled the sewerage financing of deficit through an institutional reform in our country. In the late 80s, the Supermoy Committee report, Chakraborty Committee report, we have controlled that. So print money and finance deficit is not exactly printing money in that sense. We will go for treasury bills. So the ad hoc treasury bills, and then you finance your deficit, whether we should be doing it more. And of course, there is sewerage financing happening even right now. And the two concerns, as Pinaki pointed out, one is the pressure on currency, and second is the pressure on inflation. So how we are going to do that? And to me, it's my dream. If it is a finite money financing of fiscal programs, MYFFP, money financing of fiscal programs. If that happen in a finite manner, which is linked to one particular public financing of program, whether it can be employer of last resort policy, or if, as Pavan pointed out, whether it can be a finite cash transfers program, whether we can go for a MFFP, money financing a fiscal program, because the other avenues we have not seen promising developments. There are issues related to fiscal marksmanship, but whether we can go for this. But of course, as Pinaki pointed out, of course, as also cautioned by the former RBI Governor Subbarao, we should not be doing it right now. That is a last resort. We should not be doing right now, because one, we need to do all what we can to grow out. It's a growing out process. Your G is greater than R, so you should be thinking of the programs in which you can grow out. That is one solution. Second is, if your G is not comfortable, and as of course pointed out by somebody has raised that concern about G already. Maybe Irfan, I think. Of course, you need to, and Ishfaq, you need to decompose the public debt and see, because he has pointed out that the public debt GDP that can go heavier not only due to GDP, the numerator, it can happen through, if you go for a decomposition analysis. There's a wonderful paper by Piali and Chetan Kade, who is a former member of Monetary Policy Committee in India, and they have decomposed the public debt. What are the different ways in which your public debt can be managed? So, my final punch is like, if your R is not greater than G, you can have permanent primary deficit. That is the point which we emphasize. So till that moment, we need not go for a seigniorage financing as well. So you can live with a primary deficit, not primary surplus, a primary deficit if your R is greater than G. So you can grow out. This is my final point. And we have to wait and see how the government is coming up with the new fiscal rules and that huge fiscal stimulus package, whether by strengthening the employer of last resort policies or through strengthening the cash reserve programs. Thank you.
Thank you very much, madam, for the detail and every question you answered.
Krishna, I just missed out one point by Sahu on the gender budgeting.
Yes,
Quickly, I will say that gender budgeting is a powerful tool of public financial management. And of course, this pandemic affects men and women differently. Economic stimulus packages announced, it had a gender lens, but these are short term. So we need to give emphasis, as you rightly pointed out, Sahu, we need to give emphasis for the public financial management tools like gender budgeting to overcome this crisis, because it's not a growth question. It's a growth plus human development question. And there, this PFM tool, gender budgeting, that fiscal innovation is quite a promising framework. Thank you.
Yeah, madam. I think there are even a couple of questions, but I'm sure you will have some meeting, as you told me. We are already running late, a little bit as per your schedule. But you have some time to take, madam. I think 3-4 questions. Should we wind up? Lekha, madam.
3 quick questions. Final 3 quick questions. Okay, go ahead.
Yes, yeah, ma'am. So I think in the chat box, there are 3 questions, 3 to 4. Like, if the government gives the cash transfers to increase the demand, and at the same time the inflation due to fuel price rise, the real income has come down. So what should be the solution in this situation? I think he's concerned about how this petrol prices impacts. And another is Rijvi. Since COVID has impacted entire economy in adverse way, my question is precisely for SMEs of food processing industries. What are the prospective ways these industries can overcome the loss incurred during this pandemic? Be it loss of productivity or financial crisis or some problems with market accessibility. And Dishon says, another question, the pandemic brings stagflation where unemployment and inflation is very high. So what is policies to get out? Furthermore, inflation is due to economic mechanism or a political economy. And the Risha is saying, are indirect tax and public debt and demand higher FRBM and declined revenue. The last Binita is saying, what are your suggestions to government in this uncertain era to stabilize both the revenue and expenditure policies and promote and social welfare? I mean, to add to them a very small question, I'm hearing a lot of criticism saying that this is an investment loan mela rather than investment stimulus or physical stimulus. So how do we see and government measures in the past? So whichever is possible, you can answer, madam. I understand your time, you're running out of time. Thank you, madam.
Thank you so much for your concern. So quickly, I will say
Yes.
that, of course, their concerns are quite relevant. That, fiscal stimulus, of course, a major component of the fiscal stimulus and the monetary stimulus packages we announced, not only in India, because I have done a major study on Asia Pacific. Of course, these are of liquidity infusion in nature, like giving guarantees, and of course that there is a concern over that. But the fiscal stimulus, in terms of pure money, that depends on the fiscal space you have. So within the constraints of fiscal space, the liquidity infusion was a major. The guarantees was the major the component which RBI and government of India was focusing into. But I am aware of these concerns because maybe the concern is that the criticism is that these are just supply side announcements. Unless we tackle the demand side issues, even if we support the enterprises, as one of the students rightly pointed out, even if we want to support the small and medium level enterprises by giving loans, but there should be a market for their products, right? So what is the capacity of the people? What's the marketing? What's the purchasing power? Unless we give emphasis to the demand related policies, how can that cycle of a stimulus package be complete? These are concerns. And and other questions, I think these were some of the questions were repetitive, and I think I have addressed their concerns, and the students listened to my concerns when I was responding to your friends. And I stop here because there's a hunch, and all the questions, that concern is real, that we are just focusing on liquidity infusion, the supply side, and whether the new monetary policy framework that is enough to tackle the pandemic times, whether we should be doing more from RBI side rather than just focusing on inflation targeting. These questions are real. So, this is broadly connected to a macroeconomic narrative as well. Over the years, there was a transition in the policy space from the discretionary power of policymakers to rules-based framework. So we have to see that macroeconomic policy constraints. So the fundamental rethinking in the macroeconomic policy framework, the rules-based framework, both on the fiscal and monetary side, is very relevant to deal with this pandemic effectively. And that is, when you ask me, what is my feedback to the government? This is my feedback, because our constraints coming not from the targeted sectoral programs which we announced. We have announced consistently, continuously, sincerely, we are announcing many things. But what is the missing link is maybe we need to look into that fundamental macro fiscal constraint, macro monetary constraint, in which that discretionary space to the rules-based framework. So that rules-based framework, what are the constraints over there? That is my feedback. That's what you were asking me to. That's my feedback. Thanks, Krishna.
Thank you, madam. We will not bother you again. More questions I think people are having, but I think the way I think Lekha madam style you have taken the lecture, it is more interactive. I'm sure all the participants got a very good benefit and got some an idea how the government policies and this madam. And the madam was very busy in schedule, but kind enough to adjust the time and give. But we have taken more time than what she has agreed. So without going much into detail, now I request our MA student Divya Archana to have a word of thanks to formal just word of thanks. Divya, over to you.
Thank you, sir. Good morning, everyone. I would like to express my gratitude to our honorable speaker, Professor Lekha Chakraborty, for accepting the invitation on short notice and taking out her time in spite of the busy schedule. Thank you, ma'am, for enlightening us on various aspects of macroeconomic policies with respect to the current pandemic. I would also like to extend my special thanks to the chair, Professor Ramnamurthy, Dean, School of Economics, UOH, and the coordinator, Dr. Krishna Reddy Chittedi, for hosting this event successfully. Special thanks to Professor Pinaki, Director of National Institute of Public Finance and Policy, and professors of
Yeah,
University of
Divya,
Hyderabad for
Divya,
joining.
Pinaki's here. I don't know if Pinaki has some points that Pinaki wanted to speak to students. The points which I might have missed. So, if Pinaki is there, would love to hear his voice. Krishna.
Sir, Pinaki sir, just few words. We will have you a detailed session very soon, but yeah, we would be glad and happy to hear you, sir. Please. Sir is there, madam? I think sir left.
I don't think he's there. He's not there.
I think Pinaki sir left, madam. We will have him one more lecture with sir also.
Absolutely, because if he's there, he's
Yeah,
1
yeah.
minute, students would have been, very insightful. Okay,
Sure.
go ahead. Yeah.
Lastly, I would like to thank Sai Nishant for designing the flyer, the supporting staff, and all the participants for taking part with great enthusiasm. Thank you.
Thank you, Divya. Thanks to the University of Hyderabad for also facilitating, and all my colleagues who are encouraged and supported this event. Thank you, one and all, particularly Lekha Madam. Thank you so much. And we look forward to have more and more lectures in near future for benefit of all of us, Madam. Thank you very much.
Thank you so much. And this is just the beginning, as Krishna pointed out. The students, please, be in touch. You can have, my Twitter handle, you can share, Krishna. And
Yes, sure,
also,
ma'am.
of course, FB is an informal space, but you can always be in touch with me. You can send me that you're a Hyderabad University student, so that I can know that I can, enter, and we will be connected in Twitter. And wish you all the best. And thanks once again, Krishna. I will speak to you later. Yeah.
Yeah, madam. Thank you. For students' information, madam is very informal. You can contact her in any form. Wherever is possible, she will respond. We are all benefited and lucky to be students of Professor Lekha. So I'm sure even anyone approaches, they are always available. Pinaki sir and Lekha madam are there. Their home is for us like our home. Anytime you go Delhi, you will also get accommodation or whatever you support is required wherever is possible. They're always there for us. So please be in touch, and academically or any other support, they would happy to do it. Thank you one and all for joining this session. Have a great day. Stay safe. Thank you, everybody.